Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Prashant Pitti, co-founder at EaseMy Trip, joining in. Welcome to the show, Prashant, and a pleasure to get you on the show as well as speak to you to get insights. Overall, Prashant, since the time of inception to now, a great growth story that we've seen with EaseMy Trip. As a standalone entity, as well as if you have to compare it to peers as well. If you could just help us understand how has the journey been so far? What has helped you see a 47% CAGR growth over the last 2 to 3 years?
Well, thank you so much for having me on the show. A little bit about EaseMy Trip before I talk about our growth. We have been in industry for last 13 years, and we are the second largest OTA in India right now. Now, the company grew primarily via its profitability. We never raised any funds from either banks or investors over the last 13 years. And for all the 13 years, for each quarter, we have remained profitable. So profitability is not new to the company, and we grew primarily on our internal accruals. Now, the growth primarily has come via word of mouth. EaseMy Trip treats this business as a commodity business, where if you offer value to consumers, they will come to you. You don't have to spend too much amount of marketing. And this is precisely what we have been doing by offering customers an option to not to pay convenience fees on EaseMy Trip. Because of which 99% of the time, our ticket prices are cheaper compared to our competitors. And that is how the word of mouth spread. And that is how we have grown.
Right. So overall, Prashant, if you could help me understand, how has COVID impacted business and how have things changed pre-COVID to post-COVID?
Well, to be honest, a lot of things have changed, because of the pandemic. The people's habit of purchasing, spending on travel, we're seeing phenomenal amount of shift. To give you a couple of ideas. One, the length, the duration for which people stay, that is elongated. Earlier, the average was 3.2 days. Now people are staying for on an average for 4.7 days. Earlier, we used to see around 30% of tickets as return tickets. Now we are seeing only 15% tickets as return tickets.
Okay.
Wherein people are not planning well too much in advance. A lot of travel are, a lot of flight bookings are happening for less than 7 days period. So people, again, to reiterate the same fact that people are not planning way too ahead in advance of not knowing what is going to happen in the future. So these are some of the changes which we are seeing. And also, the bookings for 5-star or 4-star properties have increased proportionately compared to the bookings which were happening for 3-star or 2-star or even budget hotel. Probably this is to do with this sanitation expectations people have. And also we are seeing a lot of booking which are happening related to homestays these days.
Right. And with all of this, how have operational efficiencies increased? And what are the kind of cost cutting or cost saving, rather, I would put it in that way, initiatives that you've taken? Because majority of the companies have changed the way of doing business, and that's for good as well, because a lot of things which probably no one thought of could be done in an easier way, in a cheaper way. That's what companies have adopted due to COVID, and everyone plans to continue doing the same. For a company like yours as well, operationally, what has changed?
See, we were anyways an extremely cost-efficient company. And that is why we have been able to remain profitable all this while. So, in fact, one of the biggest USPs of this company is the efficiencies which we carry along with us. To give you an idea, our fixed cost, which is basically the admin cost and employee cost, is somewhere around 2.3% of our GMV. Basically, what it means is if you are able to sell 100 rupees per ticket, our employee cost and our admin cost is 2.3 rupees. While for our competitor, if they are able to sell tickets worth 100 rupees, their admin cost and employee cost itself was 9.6 rupees for FY22. That is the amount of difference between both.
Got it.
And now, of course, during the COVID, we have made ourselves even more lean, even more efficient. One particular thing, if I may explain on what we have done is, for example, this is the status quo. If you have to get service on any OTA, you need to call us, right? We also have a number by which you can call us. Now we realize that, it's not in the benefit of a consumer to be on the hold for half an hour on the call, right? To get their answers. Now, what we have done for that is we have allowed our services over WhatsApp.
Mm.
Where you just drop a message on our WhatsApp number and get all your queries answered by another human, which is sitting not on WhatsApp, but sitting on our panel, responding to the questions, responding to the queries of the consumer. Now, this way, you could just drop a message and then, do whatever you were doing and get your response 10, 15 minutes later. Well, this comes out as a double bonanza. It's coming out as greatly beneficial for the company because earlier one agent was on hold with one customer over the call. But now one agent is chatting with eight different customers simultaneously.
Correct.
This is brought us tremendous amount of operational efficiencies to the company.
Right. So with all of this, another interesting fact that I see over years is FY21 itself, if you talk about your margins, they almost nearly doubled. Now, I understand your employee cost is lower, your other costs are lower, your advertisement promotion costs are lower. Do you think this is something which is sustainable going ahead as well?
See, honestly speaking, this is the value of being an internet company. For an internet company, your business may grow 10x, but your cost need not grow even by 2x. This is the biggest difference between a retail company and an internet company, which India is yet to discover on capital market. And this is exactly why, we are paying premiums to company like Zomato, who are still extremely loss making, but hoping that they will, as they continue to grow their revenues, their expenses will not grow as much. So this is exactly what is applicable for EaseMy Trip as well. As our revenues, as our business continues to grow, our employee cost, our advertisement cost, our marketing cost need not grow in the same proportion as our revenue. By the virtue of being completely online.
Online, right? And overall, in terms of channel wise as well, how is business expected to look like, say, 24 months from now between B2C, B2B2C, and B2E?
See, prior to COVID, our split was 87% was B2C, which is people coming to our website or our mobile application. Around 10% was travel agent and 3% was corporate. Now, at EaseMy Trip, we were not overtly dependent on corporate business, which has been impacted by the maximum, right, during the COVID. Now, right now, that split is somewhere around 93% as B2C, 6% is travel agent, and 1% is corporate. So you can see the impact of the COVID. Now, my understanding is that the corporate business will come back, but probably will come back by 60 to 70% of what it was. The corporate business will come back very strongly. The IT corporate business might not come back as strongly. While the travel agent business may also go down by a bit. And however, all of this will give humongous amount of tailwind to the B2C business. That's precisely what EaseMy Trip is right now.
Right. And overall, again, bulk of our bookings is with regards to domestic. We are still, I think the previous year, we were around 18 to 20% with regards to international. Are we expecting that mix to change, or due to COVID, do you think this is something which will remain stagnated for some time now?
See, by the virtue of international travel not happening as much right now, I think that mix is pretty much same for all OTAs at this particular stage in time. However, pre-COVID, our mix was 82% domestic and 18% international. And international, while the company was growing at 47% year on year for the last 2-3 years, our international business was growing at 120% year on year, 120% year on year. Prior, and then the COVID hit, right? So we anticipate that whenever these restrictions and lockdowns are relaxed, there's a huge pent-up demand for international travel, and EaseMy Trip will surely be one of those beneficiaries.
Right. And overall, in terms of the solutions that you provide, it's pretty much end-to-end, say, between air tickets, hotels, holiday packages, rail tickets, bus tickets, and you have ancillary value-added services as well. So currently, has the trend changed wherein because people are not traveling that much, your bookings or your revenue with regards to hotels and holiday packages that's something which is higher. Your value added services is something which is higher versus your ticketing business.
So that's just by the nature that our other non-air segments are increasing at this particular time. You know, and the reason why they are increasing is we are doing cross-selling. If you are buying any Delhi Bombay ticket, we would basically email you the top 10 options in Bombay. So this is how the business is growing, and we're looking forward to this growth. In fact, it was pretty much anticipated from our side that our non-air segment will grow. And the other way we are looking forward to grow is inorganic growth. So we are speaking with various companies in non-air side, which is hotel, bus, train, not the flight. Where on the basis of acquiring them, we could basically add value to both the companies and also grow our non-air base to a strong number.
Right. So when we are looking at that side of business in terms of a strategy, how do we see a direct reflection on the financials? Do we see a further improvement in terms of margins? Do we see a further improvement in terms of profitability? I mean, how does that work out?
See, to be honest, we are growing profitably, and
correct.
I mean, if you compare any other OTA, nobody would be able to come even closer to EaseMy in terms of profitability. For the last quarter, quarter 4 of FY21, I think we delivered PBT of 40 crores. For this particular quarter, we delivered PBT of 30 crores. A quarter of December 2020, I think our PBT was somewhere around 20 crores. So our run rate on the basis of PBT itself is somewhere around 120, 130 crores right now. And while all the other competitors are in losses.
Correct.
So for us, in fact, I would even go on to say that this company was profitable even in the first wave quarter. In the first wave quarter, which was April, May, June of 2020, we were able to generate PBT of plus 2.5 crores, not minus, plus 2.5 crores. We got only 1 month to work, which was just the June month, because April and May was complete lockdown, right? Only in 1 month, we were able to cover up so much that we were able to remain profitable even for that particular quarter. So as a history of being profitable, margins is something which I may not be able to comment exactly. By the virtue of internet business, my margin should only go up. But then a lot of things depend on the margin otherwise as well. How the company is growing and other things. So I may not be able to compare, but the history speaks for itself. And this company has not seen even 1 quarter of loss.
Correct. Yeah, I mean, absolutely. And that's commendable as well, especially for a company which is operating in the travel industry, an industry which has been the worst hit with regards to the pandemic. So it's really commendable to maintain these levels of growth and profitability. So Prashant, where would our market share stand right now?
So our market share for air industry, not just the OTA, but the entire air industry was somewhere around 8 to 9% at this time.
Okay. And taking the scale that we are looking to achieve, where do we see it in the next 3 years?
And if I may add, if you only look in the OTA space is roughly half of the entire, airline market. So in that space, from the OTA side, we are somewhere around 18 to 20% as a market share. For the overall, airline industry, we are between 8 to 9%.
Right. And where do we see it from here in the next 3 years?
Again, rather than giving any futuristic number, I would basically talk about the past. Let me just compare EaseMy Trip number with the industry leader. All right. In terms of selling air segments. The industry leader was 5.6 times bigger than EaseMy Trip in FY19. In FY19, they sold 5.6 times more air tickets compared to EaseMy Trip. In FY20, they sold 4.2 times more air tickets. In FY21, they sold 2.7 times more air tickets. And in this quarter, which just concluded, which is quarter 1 of FY22, they sold 2.3 times more air tickets. So this is how fast we are catching up. And rest, I will leave it for your and your viewers' imagination. on how soon can we become the market leader. Not whether or not, how soon.
Absolutely. And overall, in terms of inorganic growth, in terms of growth as well, any acquisitions that we're looking at?
As I said, that we are looking for acquisition in non-air side. In air side, we are very sorted. We are growing profitably. We are looking at acquisition for the non-air side, be it bus, hotel, cabs, trains. We are considering, and in the last 5 to 6 months, I must have spoken to about 90 odd companies, of which we have shortlisted few, and we are seeing. But again, let me tell you let me give you a color of what kind of companies we are looking for. We are looking for companies which are somewhat like EaseMy. They understand the unit economics very well, are almost profitable or at break-even stage right now, growing extremely fastly, are disrupting their market. These are the kind of traits which we are looking for within the companies. And you'd be surprised to know that there are quite a few who may not have created a lot of headlines or eye-grabbing headlines by saying we received $10 million, $15 million fundings. No, but they have kept close to the roots. They have continuously grown by being bootstrapped, and have a very solid financials to carry along. Those are the kinds of companies we are speaking to.
Right. So in terms of acquisition as well, whenever we do it, whenever we shortlist a company, will it be through internal accruals, or do you think we will be raising funds for the same?
So it will be either through internal accruals or it will be through equity swap.
Okay. And overall, if someone has to look at a company like yours and say, okay, what's going to be the next milestone that we are looking to cross, what would that be for a EaseMy trip?
Well, first and foremost, we want to be the leader in air segments. That's definitely what we are looking for, we are eyeing for. And we want to triple our numbers in our hotel, bus, and train bookings.
Absolutely. So that's going to be the journey we're looking at from here on as well. Thank you, Prashant, so much for joining us on the show. Pleasure to speak to you and get insights. Congratulations. Good luck as well for the coming years. Stay safe and speak to you soon again.
Thank you so much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.